Hey guys, welcome to another episode of Trading Indicators Explained, where I'm going to go through all of the different trading indicators that my platform of choice, Trade Ideas, offers, how they're used, the math behind them, how you guys can maybe take some ideas and implement within your own trading. Please note, again, if you're interested in the product that I'm going to show you that has all these and can scan for all these, links in the description below. Full disclosure, that helps out the channel. So if you use that link, that discount code, that would be fantastic. But let's get right into it with today's RSI, Relative Strength Index. So first of all, the math behind it, I think it's important to note that there is a difference between relative strength and the relative strength index, where most people in trading, when they talk about relative strength, they mean something about Apple is outperforming Google, or Apple is outperforming the SPY, or something like this. When it comes to the relative strength index, you're comparing that stock's movement versus prior movement. So I've put the math down here like I always do. I get a lot of this from Investopedia, so give them a shout out and say thanks. So I don't have to draw out these formulas, but essentially it's looking at how did the stock move prior? What strength? What was the average gain of the stock over a period of time prior versus what is that now? Is it outperforming? Is it underperforming? Is it performing way more than before? What is that? But that's essentially the math behind it right there. So first of all, is always how it looks in Trade Ideas. You can add the RSI indicator to the bottom of your chart here. You can also scan for it. I have it on time frame. I think here is daily, but we have 5, 15 minute, 2 minute, 30 minute, 60 minute, and daily. So we've got all these different, I do everything on these daily charts, but note that everything I'm talking about here for daily, quite often you can do in something with intraday. So again, line at the bottom, it's important to note that essentially the RSI is an oscillator, which means that it has a floor of 0 and a cap of 100. So it can never go over 100 and it can never go down to 0. And it's kind of like a ranking system in which, things that are ranked 94, I have here an RSI of 94, or the one that we're looking at on DNIL is 87.5, essentially means that it's a really high RSI number. It's a very, very kind of overextended or overbought would be the technical term with this number. So first use for it right here, I have overbought and oversold, right? So quite often people will look at it and they'll say, okay, if I'm ever, some people use it for picking tops and bottoms. For new traders, I never recommend trying to pick tops and bottoms. I think it's the hardest part of the game. But what you could do, for example, is say, if the stock is in an uptrend and I believe it's going to continue that uptrend, I may wait for an oversold reading in order to buy. Or if the stock is in a downtrend and I think it's going to continue in a downtrend, I may wait for an overbought to short so that I can, make sure that I'm not chasing the market. Like, for example, in this DNIL, this may be looking at chasing because the RSI is overextended. So if you wanted to buy this stock for whatever technical or fundamental reason that you have, you may look at it and say, well, I'm not really going to touch that one just because it's a little bit too much right now, and I just wanted to kind of chill out a little bit first. Another one is trade exit. Again, using the same chart, that's fine here. But you could say something, for example, say you were in this DNLI, and you were in DNLI when it broke, over $50, for example, and you're saying, well, where do I take my profit? There's no real resistance on the chart. I want to look to capture in profit. You may say something like, as soon as it gets over 80, which is what most people consider overbought, and 20 is what most people consider oversold, you may say something like, if it gets over 80 and it's considered overbought, I'm going to take my profits there, and then wait for the RSI to even out, and then maybe take another trade on it from there. So that's another way to use it, and it's one of the ways that I personally use it. I use the RSI in 3 ways, and one of it's on the next chart. But the first one is just to say, I don't want to trade stocks that, I don't want to buy stocks that are overbought, and I don't want to sell stocks that are oversold. I'm not going to pick tops and bottoms. Again, I think it's an unnecessary pain to try to do. However, I do think there's some merit in saying I'm not going to go. I may not think it's going to reverse all of a sudden, but I think the likelihood of it moving higher and a lot higher are a little lower. So I won't trade stocks that are overbought or stocks that are oversold. The other thing I do is, again, for this trade exit, if I'm in a stock and it's taking off and it's doing everything I want it to do, I'll look to say, okay, is with the RSIs looking overbought and maybe we've got some bearish candlestick patterns, maybe it's time to exit and wait for a pullback or move on to a next trade. The last one here, I found a divergence, and I just want to point that out. This is the other way that I trade it, and it's kind of my favorite way. Again, I talked about picking tops and bottoms, but again, you could do this in the context of a trend. You could find an uptrending stock and zoom into a lower time frame and find a divergence there to play off of. But this KOD stock, you can see as it's making new highs, as it's moving up, if you look at the RSI indicator on the bottom, that's making lower highs. So it means there's a divergence going on. And basically what that means is that the first move that took X amount of strength to make that move. But the second one that pushes up is using less strength. So, as it goes up, the momentum is actually decreasing. So if you were a top picker, you may say something like, I'm going to look for this RSI divergence, and then I'm going to wait for a bearish signal, which you could say in the last two candles, that was a shooting star. And you can say, okay, now that it's overbought or there's the divergence kind of in the overbought area, and I see this bearish candlestick pattern, maybe it's time to try a short. Or again, maybe if I'm long this and I see that divergence, I say, okay, momentum is weaning, let me take out. Again, some people will use just the overbought, oversold, and some people will say, okay, I want to see the RSI kind of come off a bit to kind of confirm that might be the end. Because as you could see, your initial exit on KOD, if you just use an overbought condition, would have been somewhere in the $100 area, where it went all the way to 120, 130. So that's 20% left on the table. So in this case, waiting for the divergence or the RSI to coil back down would have helped out a little bit there. So let's go into the chart here. So this is KOD exactly, and shows the RSI on the bottom and the divergence here. If we go into the scan right here, you can see that I can rank all these stocks. These stocks are ones that are doing decent volume. And I can go and I can look at all the ones that are overbought. Again, if this was something that I was interested in fading, I could take a look at them and say, oh, this is way too done, right? This RSI is at 86. That's very, 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 very high for JWS. Maybe there was some resistance here or something like that. It may be worthwhile looking to take a short on. So again, it's this simple oscillator that talks about overbought, oversold. We can scan for it on many, many different time frames, from 5 minutes to daily. So again, check it out. Those are some uses for it. And again, if you're interested in the program at all, link is in the description below, and I'll talk to you guys on the next one.